Well, I do think there's definitely a new source of volatility. So if you look at what has happened, the markets were pricing in a shift towards the Democrats in the House. That was already priced in. And so to some degree, removal, now we know that, and the market knows what it's in for. But what's interesting is that the administration, just in its first few days of digesting this new situation, looks like it could be potentially more erratic. And what the market is not priced in for is any kind of a constitutional crisis. Now, I'm not suggesting we're going to get there. I'm simply saying that we could see more erratic behavior out of the administration with this until this settles and the relationship is settled and deals get struck. And so I think for a period of time, nobody knows how the Democrats in Congress are going to play with the president's administration and with the Republicans.
Yeah, and this is not a political segment. It is a market segment, but you can't eliminate that political risk from the markets, can you? Because we know there are many on the left who would like to go after the president, whether it's impeachment or his tax records. If things heat up, if we start to see this sort of war of words or increased investigation, do you believe, Gina, that is a market risk?
I do think it's a market risk. Look, here is what the markets are concerned about. The markets are concerned that from here on out, that the political machine goes into gridlock, and that means we're not going to get any future fiscal stimulus. The tax stimulus is already wearing off. We're at 25% earnings growth. Well, we're naturally going to slow from here, but there's going to be nothing to follow on to that. So that's really the market risk that is largely pricing itself in, and I don't think that the pig is fully through the python there. I think you actually still have some further multiple compression in order to reflect sort of lower expectations going forward. So I do think there's some downside to the markets from here. But if you layer on the potential for, let's call it, a more adversarial Congress relative to the administration, and like I said, a potential for constitutional crisis, that actually adds another layer of potential downside risk to the multiple, because in that scenario, it's difficult to plan as a company. So the corporate earnings then become questionable.
Outside of that, what would be the biggest risk for equities here?
Look, I think that equities right now are having a natural rollover that you get after a stimulus event, and we're expecting that value is likely going to be your best performer. I think the biggest risk from, and that's, I think, now an expectation, I think a lot of people, the biggest risk is that cash becomes king, actually, which is that the Fed continues to tighten and that the outlook becomes less certain, and you sort of get into the kind of a really uncomfortable scenario where interest rates are rising, but the outlook for the economy is naturally slowing. And so you could actually get into kind of a pain point in 2019, or maybe even toward the end of 2019, that you start pricing in early in 2019.